All right, so today is Sunday, November 7th, 2021. And what I want to do now is do something. I have changed my screen to black, to white on black. Well, it doesn't matter. I wanted to kind of use a different look. I also changed my layout on this particular screen, just again, just for a different look and just to kind of view prices slightly differently. The other one's a bit too colorful, and I'm really interested in seeing what's actually going on here. Anyway, so I want to go through these 5 tickets that I plan to trade on Friday. I actually took trades in Net, NVDA, and Zoom. However, I was watching kind of all 5 of them. I only had, I don't know if I had Net, definitely, GS, PayPal. Oh yes, I had 6 tickers on this screen, but I reduced it back to 4. And I think going forward, I'm probably just going to focus on 4 and try and trade maybe 1 or 2 throughout the day. Um, right, I'm thinking maybe I should just use this screen instead, or maybe I'm not even sure how I want to do this. Anyway, I'll just kind of tell you why I have decided to. Before, I used to just have a 1 hour chart down here and a 5 minute chart. Now I have a 15 minute because I think the price action on the 15 minute is as important as is on the 1 hour. I generally just use the 1 hour chart just to plan trades for the day. But I've been doing a lot of reading and studying Al Brooks's work on price action again, and just really want to focus on trading better, trading the open better. Um, on Friday, I took this long, anticipating a reversal because we had in my opinion, I thought we had a support here. But what I did not do was actually I had to go and have a look back at exactly what has been happening in the market. I noticed that we had this wedge which formed this drop. This was the support, which I don't normally draw, but I realized I need to do that. It was an expanding triangle. And I noticed that, in fact, what we did was we came to test the support from the open. Um, but that's not even just that. I want to get better at trading the open and trade it from a price action standpoint. You can see we've rallied up here, pulled back, rallied again, pulled back, and then rally the third time, which forms a parabolic wedge. It's also at a very prominent support area, I believe. This area is an area of a sell area. So if you look on the 1 hour chart, it's actually in confluence with, you know, a pullback area over here. So it kind of makes sense. And also, if you think about it, this was the old support turn resistance. So it makes sense that in this area we would reject it and then possibly come back and test this area. But I wasn't to know, I hadn't sort of analyzed the market as well. I just saw it as, and in fact, as I look at it now, I'm asking questions like, okay, yeah, we came down here. I thought we were in a trading range. This itself was a range. I thought when we were here, we had formed a wedge from this low to this low to this low. And I always make this mistake where when price comes here, we reverse, when in actual fact, we always have this overshoot. And this overshoot sometimes has a double bottom, maybe another leg down or 3 pushes down, and then you have that reversal or a trading range, then reversal. But I wasn't to know. I essentially just had my own idea and just went long as a result. Did not even think about what we were breaking out of. I think just looking at this sell off and this particular area, this breakout, should have said a few things, possible, and also the moving average. I just read. I've been reading Al Brooks's. Let me see if I can. If I have I have a PDF of the book. He has a book on price action reversals. I've been reading it. It's a very heavy, thick book. But you can get a. I mean, I have the physical copy, but I hate to say, I hate talking about my dyslexia, but I don't need to talk about that. Uh, I use Adobe, I use Speechify to, I just don't want to lose the page I'm on, which is why I'm holding, let's just do it this way. So, not true. I have this, I have all three books, but he has one on, let's go, Al Brooks, reversals. So I'm reading the one on reversals, and in particular, I am reading, not this. This is his page, and I learn a lot of price action through him. But I'm reading this one in particular on reversals. That's the book, and I'm focused on the chapter on the open, and really just getting an idea of patterns related to the open. Brooks is a very, very, very experienced day trader who has done very well in terms of breaking down the markets, and it's his ideas I use for price action. But anyway, so what I noticed some things I noticed when I was going through the charts last night in my sleep, and when I say in my sleep is I could not sleep last night. I was just going through the charts on my iPad just to kind of get a good sense of what was actually going on, what was happening, why did we sell off the way we did, and what were we selling off through, what were traders doing, why did in particular this open really, really confused me, because I thought we had a very strong bull bar. Okay, 50% of rallies will fail from the open, but how could you have traded this open? I saw this, I thought, okay, fine, maybe I go long here, and I did go long a bit early, and that should have been my stop. But as you can see, there were certainly a lot of things I did not consider, one of which was probability. Risk reward definitely, but not probability. So we had this breakout, right? Especially as you see we have a massive gap down. Another thing I learned from his book is the inaccuracy of the moving average at this time of the day, the first opening hour, just because this moving average right now without extended hours does not consider pre-market. And of course, as you can see, when we put the moving average in, the price actually comes to the moving average, tests it, and then sells off. So you can choose one or the other, but you have to be very aware of it. What is important is to consider, and I do this every time, I look at how we traded the previous day. And if you notice, on the previous day, we had a wedge top, which led to this sell-off. If you look at it with extended hours, it actually looks a lot cleaner. Actually, you can actually do it without, because I noticed I did this on my iPad, and it joins pretty well. It connects really, really well. So we had a wedge top that led to this sell-off over here. But prior to, obviously we were here, we saw this sell-off, and it was a very strong, as you can see, the bars are just red. You don't see any sort of two-sided trading, just very strong red, which essentially is a breakout. And so therefore, what that would have said to me was, if we were breaking out here, we were gapping down massively, and as you can see, we had a huge gap down. So huge gap down, chances are bulls are going to try and reverse. It was a gap down that was, he had a double bottom, so maybe some people went long here, and then they are, I don't know, you see, this is the thing, they could have tried to cover when they saw this reversal. Maybe some bought more here, waiting for a 50% pullback, possibly. So we can see whether we have a 50% pullback. Yeah, we can see we did get a 50% pullback. So you can imagine some bulls bought over here, but on what signal? Maybe they used a 1 minute bar to buy and then sold 50% of their entry here on this chart, maybe, God knows what. But what's interesting is this rally at the open, which came from this sell-off, was a bull test, right? And a bull test of this resistance. So you can see essentially bulls buying, trying to reverse this trend, And even if you take this pre-market off, it's actually using this as resistance. So there are different things that you could have taken as resistance. Maybe it was the moving average. Actually, no. Anyway, this has always been resistance. I thought it was a moving average. But anyway, what's happened is prices rallied. And what you've now noticed is the follow through. And this is what I did not consider, the follow through. If you have a bull bar closing on its high, you want follow through, which would be another bull bar closing on its high. This is a big one, which already satisfies part of the criteria, but you don't have a second bull bar. So follow through is weak. I didn't really consider that. If you look at that on the 1 minute chart, what you actually have, which is actually very interesting, is you notice that a triangle is forming. Here, 3 pushes up and three pushes up and 3 pushes down, and then the breakout on the moving average, which led to a very strong bear trend. But I don't need to go to the 1 minute chart because things are just confusing. You can't I find that making decisions on the 1 minute chart just leads, I start having heart, my heart starts to beat. Now you have a trading range, which is a triangle, 1, 2, and 3 bear breakout. Normally, whenever you have a strong trend like you did over here, strong bear trend, chances are you're going to have follow through. So this is just a bear spike and a pullback. It tests the resistance, and I should have considered that, but I didn't know this, obviously. First thing I should have noticed was, obviously we have resistance here, so I'm glad I drew this. Secondly, we're testing it, and also we're not getting good follow through. So 1 strong bull bar, 2 bear bars. 1 bull bar, 1 bear bar, really big bear bar overlapping this. So you have a doji literally. More dojis forming. This is not good follow through for you to go long yet. It just already tells you that we're probably not going to get a bull trend because of what we're getting. Probability is with the bears. After all, we have been selling off. Bear breakout. So essentially, we're going to probably try to test the low of day. And as you can see, we're printing more bear bars than bull bars. This is a good entry short. I would probably say maybe go short here with a reasonable stop over here. This is not a very, I would find it difficult to go short over here because I'm concerned I may reverse, maybe have a double bottom. But certainly see how we, as you can see, we're getting more bear bars. So the probability is with the bears. You could certainly go short and start scaling in as we're going down. Also, another thing I forgot, we're below the moving average. Let's see what we were like here. Yeah, we were below the moving average even here. Even though we attempted to cross it, we just kept on pulling back, and then we broke out. And then yes, this is a great place. Maybe put your stop here and then short all the way down. So this is something I did not consider. So that was that trade. Another really interesting one was GS. I didn't take any trades on this one, but I noticed a few things which were really interesting. I put here that it's possible for a bull to have a bull. What did I write here? I said it's impossible for a bull flag to fail. Oh yeah. So here we have a bull flag. And why do I call that a bull flag? Well, think about it. Look at how strong this rally is, right? So this is like a final flag, and then it fails this way. And it failed at resistance. So if you pull back, we have resistance here, which is your support. So this area is an area of agreement if you want to, or an area where some bulls may have bought. Bears would have shorted here, pulled back, or bought here, and look, we're selling off again. I actually think we may get a major trend reversal because this has been a low. Let's go on to the default. I also drew some supply areas based on supply and demand strategies. I actually was looking, this I drew on the day. I thought we may reject this area, and I think also this as well, but we didn't even get that far. Instead, we had some other zones here. But besides that, the price action was such that we had all this selling in a broad channel. Double bottom rally broke the channel. So you're breaking this channel. I think this was based on pre-market. And then you now have a trading range open. So you're getting another triangle, 3 pushes up, 3 pushes down, bull breakout, and then a wedge. And this again is a very good short inside one of the zones, and also at this support turn resistance. You can see the breakout through that, and then just pull back and then pulling down. We have one, two, and maybe a third push in here. So I've actually drawn this area as a possible area to go long on Monday, tomorrow. But also just looking at that, I think the open, you could have traded this based on the fact that you had a trading range here, and also consider the fact that we had been trading strongly. One push, two push, three push, double top. It's a final flag. And also just expecting a final flag. We sometimes get a trading range open, reversal, and then a bear trend. That was something that I should have considered. Net was one again that I did not trade very well, and I was very disappointed in myself. I think I was so biased by what was going on over here. I've been looking at what has been happening with things like Airbnb. So Airbnb had a breakout above a strong support on earnings. So I was expecting this sort of thing, but actually it's even interesting now looking at Airbnb. We actually have a wedge, and it's a spike and channel bull trend. So this is something that I should look into, of course, above the moving average. But going back to net that we were looking at, I'll just put this in here just so that when tomorrow I don't forget it. So looking at net, I was expecting that we would have that same thing, but I just did not consider the fact that maybe we would have a wedge. Double top and then a sell-off. I wasn't thinking about that at all. I mean, it's hard to read in here. I'm sure it's easy on the 1 hour. In fact, let's just put this on the 1 hour. And just do that. In fact, it says a buy climax, a really big buy climax. And then you had this gap up. The price was already rejecting from this double top. I did mark this level. So let me just mark this and make it a lot more clear. Edit from here, and then just kind of make that purple. And then mark this support. I expected price to, at least if it bounced, it would bounce on the support line, head back up, because we opened around here, but it wasn't to be. If we go back to the price action, there are a few things I ignored and things I should have considered. It was pretty straightforward. So I remember I actually took this trade long here, but the probability was so low taking the trade long here. I was expecting a bull trend to start, but look at this, 2 bear bars. Look at how strong this bear bar is compared to this entire range. You have this huge bear bar. This is the most dominant. This will probably be the most dominant feature of the day. So chances are we're going down. Should have taken this bear trend. We came to the moving average, tested it, pulled back, but then look, this double top. Apparently this is a very reliable pattern. This double top in this area, could have taken it short here, stop at the top here, and then taking it down, because again we were coming to test the moving average, broke through, pulled back, broke through strongly, 1, 2, and 3 bottom. And then just pulled back, sold off at the moving average again, small pullback, bull trend over here, sold off again below this moving average, which is cool. Yeah, I had no reason to go. It was just a gap and then a sell vacuum test of this gap, so you can call it a gap fill. So that was not, something that, of course when I recorded this I hadn't yet shown you all this, but this was a dominant feature, and I remember seeing it, but I was looking at it on the 2-minute chart. My mind was, I was thinking about something else, because I think I was very upset with my Zoom trade. Yeah, I just saw this sell off, then saw this, took it long. So, we have a wedge here, I can go long, and maybe we'll start heading up. But no, it wasn't how I should have looked at it. Did not consider probability at all. So that was not a really good trend from the open analysis. Then the next one was NVDA. NVDA I did take. I remember looking at this, we went long. So this is what I learned, which is pretty, my analysis of this was pretty cool. If we show extended hours, why I decided to trade the way I did. I knew we were in a trading range. Just looking at the way we pulled back strongly, went up to this top, pulled back again, so wedge bottom, double bottom, and then we went up again, and then we sold off. But if we take off extended hours, before that I drew this top, I drew this bottom, and that's what I had. I don't think I had this low, did I? I don't know why I have this low. All right, let's go in and have a look without the pre-market on. I'm not sure why I have that low on, because I have a low here. I can't remember why. But anyway, so um, we rallied strongly and then we came down strongly. I remember when we came down strongly, I said to myself, well, big down, big up. We're in a trading range, so chances are we can go long here. And I did go long, made some money here, and then lost some money there, which I should have just held because look, we came all the way to the top, tested it, had this wedge, filled wedge at the moving average, went up again to test this area, nice double top, and then sold off, broke low of day, and then came down to the bottom of this range. Now, I remember when I was reading Al Brooks's um, his book, he actually has this as an example in one of his patterns. Was it this one? Or was it the one I just opened? Oh, I can't remember. He talked about it somewhere. I can't remember. I saw it just a moment ago. It doesn't matter. Oh, here we go. Here it is. The point being that there's been so much selling here. You can see this reversal came to test here and then carried on in the trading range. And it's the same thing here. Because of how tight and how steep this moving average is, chances are we're not going to come all the way back down. It's just so much buying. This is just a small pullback, and then we come back up in this trading range. So it's like a bull flag, if anything. We'll have like some sideways to down move as a result of that 1, 2, and then maybe one more leg down to test this moving average before we start going up. Could be a final flag as we had in GS. So this was an easy one to take. If anything, my analysis prepared me to trade this day properly. Taking it long here was pretty cool. Obviously, stop should be here, but you could also put your stop here if you want, just for a small, quick, swing. I wasn't really ready to hold for the whole afternoon. Don't know why, but this double top exactly was really cool as well. So I just told you we're definitely in the trading range because you did not break the high properly. Came back down, tested this low, moved out up to about 50%, came back down. So yeah, now have a double bottom, possibly major trend reversal because the 3 pushes down. Maybe this could come back down on Monday, or could even create a situation for a double bottom and then rally up. We don't know. Point is, we're definitely in this range, and that was something I should have traded. I had really good opportunities to trade this. Glad I didn't take this rally. I mean, you have it started, tested this top very strongly, and then reversed back to the open, and then went back up, tested it again, broke high of day, double topped, and reversed. So bears shorted into that new high because obviously bulls were taking profits there. And then finally PayPal. PayPal I did not take, but I wanted to talk about it because I created this supply area at the top here. I notice again we're in another trading range. So if you notice, we've been in a bear trend here, and then we now got into, just put this here, we've been in a bear trend, and then we kind of started trading sideways. Prior to this day showing up, we have the range, the top of the range here, pull back down and pull back all the way up, and then came down, and then we kind of pulled all the way back up in trading in what do they call it now, pre-market. So this was actually a very, very good high probability setup. If you think about it, look at this. This is the top of the range. You've pulled back, then you've come back to test exactly at the top, and then you've come back down. It doesn't get any better than that. This is the bottom of the range. If anything, it's a small, tiny bear trend because the highs are getting lower. You could, if you wanted, plotted this and join these lows like that. But it's a very weak bear trend. And then just coming in here, seeing 3 pushes up, 1, 2, 3, into this area of supply. But this happened in pre-market, and that's one of the things that made it difficult for me because we had come down so far. My stop would have to be all the way up here. This was just too much risk for a very small reward, so I wasn't really interested in this trade as a result. What I could have done was traded this breakout on this pullback and then just taken a short from there because we were below the moving average. Again, forgot. Let's see how this looks without. We went okay on that other. Considering the fact that this area, we all should put the moving average on pre-market, but there were other reasons. Again, if you traded this chart, you had a wedge top 1, 2, and then this bull climax selling off at this supply region. There was a very good short here, stop at the top, and then pulling back and then going down there. So, and then bull break, a bear breakout through the moving average, if you want to call it that, or if you want, you can say with extended hours, depending on the chart. And this is on something Al talks about. You got to choose which chart you are trading, whether your chart's trading the chart with the extended hours or you're trading the one without. But it's very confusing to trade both. And that's something I need to ask myself. Which chart do I want to trade? Do I want to trade this? I find that I can find good. I almost wanted to. Remember when I put this out, I was not sure whether this was a good point of reference. I do like removing pre-market because I like to see how we traded the previous day, but pre-market also gives me very good ideas of how we may open. So having this here has really helped me appreciate this. As to whether to get in is another question altogether. But as you can see, we had a really good sell-off here. Possible breakout of this channel here, and then carried on. And then this is just a retest of this channel, and then carried on down. Yeah. Oh god. So this was really good, sort of going through this analysis and having to look through all my trades, what I did, how I could have improved on them. I shall leave that on. I'll leave that there. How I can improve on them, what I could have done to trade them better, how and what I'm going to try and do this week coming, tomorrow and beyond. I'm not going to try and just jump in on the first bar. I'm going to wait for the first 2, maybe 3 bars to present themselves, see what the market is doing, just like you did in GS, or what could have happened in GS. We could have just waited till this formed, maybe taking it long from here, seen this wedge, gotten out maybe at the top, and then seeing the opportunity for us to go short at the close of this bar, or even this bar, and then just taking it down. So those were some very, very good options. Yeah, but all in all, I'm very happy. I'm enjoying reading that book. Yeah, let's see how it just helps improve my trading, and just kind of making some notes. I'm going to try and see if I can add this to I'm going to create a blog. I'm trying to create a blog called gdaytrades.com, and just be putting in some of this analysis in there, looking at some charts and trying to mark up areas I could have gone in and gotten out and how I could have traded them. All right, tomorrow then.